Hey guys, Randy here again. Just chatting about some interesting news that came across the wire yesterday. A company called Atom Data Solutions had a release on, I guess you could say, foreclosure starts and foreclosure stats for the month of May. And I guess the headline or title is, foreclosure starts decrease nationwide, which should be expected if we are in a position of very high appreciation and values, etc. So more people should have more equity in their property, and they should be able to sell or loan mod or do something to prevent foreclosure starts from happening. Yet 43% of local markets posted year-over-year increases in foreclosure starts. That's counter to the national trend. Now realize that when we say the national trend is as every month a decrease in foreclosure starts, everybody waves their hands and claps and goes, "Oh, this is great. The market's wonderful." Now, realize that back from the last housing crisis, when we had 8 million plus homes that fell into foreclosure. I mean, the only every month just looks better. So I want to make sure people understand that just because we hear the word decrease doesn't mean that everything is rosy. I mean, we can still decrease nationally as we are seeing, and because just that's the nature of just volume and numbers. However, when we look at a little more micro level, 43% of local markets posted year-over-year increases in foreclosure starts. So that really is kind of interesting. Now, the markets with the largest percentage of starts is Houston, Texas, obviously up 153%. That obviously is because of the storms that happened last fall and late summer, early fall, Hurricane Harvey, etc. in Houston. So it makes sense. Los Angeles was up 14%, Miami 4%, Dallas, Fort Worth 46%, and Atlanta up 7%. So you take a look at this. We've got some pretty big cities here: Houston, LA, Miami, Dallas, Fort Worth, and Atlanta. Those are pretty large and populated cities who are now seeing increases in foreclosure starts. So again, just got to take all this and keep all this in mind here. So that's very interesting. As far as let's talk about individual locations, I guess you could say, obviously those are percentages. The states with the highest foreclosure rates were, and we're talking, how many houses, one house out of X number of housing units with a foreclosure filing. So New Jersey is one of the highest states of foreclosure rates. Delaware is up there, Maryland, Illinois, and Connecticut. And it's interesting to note that, back in the day with the last and previous housing crisis and bubble, etc., you had the Sun Belt states that really started the process and took the heat and took it hard. California, Arizona, Nevada, and Florida, right? Texas, not so much, because Texas didn't have such a big delta in property value growth. Its property value growth happened after, through the recovery process. So anyway, it's interesting to note that there's other locations across the country that this is happening with. Those with the highest foreclosure rates were in May were Flint, Michigan. So one out of every 135 housing units got a filing. Atlantic City, New Jersey, Trenton, New Jersey, Philadelphia, and Columbia, South Carolina. So again, I just want to point out that it's interesting. And for mainstream media, if mainstream media, of course, likes to write about, and publish things that, hey, the market's great, it's going up, nothing to worry about. And the people that are saying that, obviously, it's to their benefit to say that, because either they're originating mortgages or writing, mortgage insurance, or whatever industry they're in, they're supporting, growth. And the more growth on mortgages and more growth on values, helps their bottom line. That's the case here. But when you really take a look at this, we are mimicking what happened back in 2006. So as values increased, as low inventories come, we're experiencing that right now. Now we're starting to see all these extra foreclosure filings. So for me, it's not the fact that we're seeing sudden market crashes and issues. If we have increase in foreclosure filings, what we're seeing is personal economic issues with homeowners. And that is a precursor to other things that may happen. So again, this is what goes on. I mean, obviously, there'll come a point in time with the appreciation and the home buying where people are going to go, I just can't do it anymore. I'm not willing to pay those high prices, nor am I willing to engage in higher interest rate mortgages or lower down payments, etc. So that's going to happen at some point in the future. But it's interesting to note that here we are, May 2018. This is the statistics we're looking at, and you got 43% of the marketplace actually had increases. It's not 10% or 5% or 16%. We're not talking little numbers here. We're talking, 43% is getting close to 50% of the market experienced an increase in foreclosure starts. So again, to me, that's very telling, and that's laying the groundwork for what's going to happen in the future. So, we're not having the January seasonality where a lot of lenders don't file foreclosures over the holiday season in the wintertime. We're talking kind of right in the middle of the year right now. So, it's a situation where, take note of this. This is important. I think this is, a turning point in the market. If we're seeing this many markets have issues with foreclosure starts, we will eventually start to see some erosion in value appreciation, and that will start to drag the market down wherever it is. Your market, one of these 43% markets, whatever. But I guess my point is that that's what's going on right now. So you have a situation where we're still dealing with low inventory, all right? And now we have, all these people who are suddenly in a position where they're not only are they not paying their mortgage, now that process has advanced far enough where they're facing a foreclosure filing. So whether it's a judicial state where it could take some time, or a trustees type state where it's a little quicker, the point being that there's a bunch of people that are in this shadow inventory gray area that are suffering, number one, but two, that is going to be the opportunity for the future. So as home buyers compete for property and get into bidding wars, still pushing properties up, as investors are out there looking for deals, and same thing. The stuff that I see, I'm looking at property that comes across my desk. People are securing them with assignable contracts, and they're listed in the MLS. And the listing price is actually less than what they're offering it to me for. And the comment is, well, we had to get in the bidding war to actually get the property. That's why the price is higher than the list price. So you see what's going on here. It really is quite interesting. So we are doing things right now that mimic and truly happened just before the last housing bubble burst and moving to a housing crisis. So I want everybody to be aware of that, but also be aware of the fact that the shadow inventory, and again, I'm not talking about the REO inventory. There's two components, again, depending on your definition of shadow inventory, there's two components. There basically is the REO, which has been taken back by the bank, so it's in the bank's inventory, but it's not put out in the market yet. All right, so they're controlling that. Number one, you don't see very many REO properties in the market. That's for sure. Also, a lot of the larger banks and larger hedge funds are basically purchasing assets and non-performing loans back and forth. So a lot of those REO potential deals will never hit the open market for new homeowners or investors to purchase. At least in my area of the country here, there's not very many REOs, and when you see them, they are overpriced and they are terrible. I mean, they're not worth, no retail home buyer is going to jump in and buy that, even a first-time home buyer, because they're typically very distressed and it's going to cost a lot of money. So that's the situation there. But the other part of the shadow inventory that no one's talking about is the pre-foreclosure market, because again, another gray area. These are the people that we just mentioned that have had a foreclosure filing. So the pre-foreclosure market is basically from the day you're filed till the day it's taken back through the auction, the foreclosure auction sale. That's the sort of pre-foreclosure part of the shadow inventory. There's a lot out there, and quite frankly, if those were able to come to the surface, and we could work on those or work on more than that, would certainly solve today's housing inventory issues. But realize that that's not what the market wants to see. So it's up to people like you and me to sort of mine that market and get the deals we can, and help people at the same time, and put some stuff out there. But realize that there's bigger problems out there. There's more controlling of the inventory than we realize, and the market's sort of being played right now. We're being led down a path. So I'll talk about that in a future video, but I just want to let everybody know that today I think is fairly monumental when a statistic like this comes out. So again, 43% of, let me just read this so I'm clear on this. Okay, it's from Adam Data. You can go to the website and check it out in the news. But 43% of local markets posted year-over-year increases in foreclosure starts. So again, to me, and it says here counter to the national trend. So that basically means we're seeing some shifting going on. And, again, I look at it going, jump in this market now, start to get your hands on it because it will pay. It will give you inventory that other people aren't going after, and it will get you set up and prepared for when things start to slide on a much faster and more dramatic basis. So that's the news for today, which I thought was worth sharing. Think about it. Think about what's happening right now. Think about what's happening in the near future. Be prepared for it. Engage us if you want to. But again, just thought I'd share this today. All right, guys, have a good day, and we'll look forward to talking to you shortly.